What is going on, everybody? Welcome back to a dividend video, and as you can see, we're going to be looking at RYLD today. With that being said, let's jump right into this one and cue the intro. I've been getting dirty money. Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long term, short term, just in finance and everything like that. So with that being said, let's jump back to the video. Okay guys, so RYLD is basically a covered call strategy put into an ETF and allows you to make passive income using the covered call strategy without you ever doing it. So they're going to be able to pick it out and they're going to do all the work for you. You're just going to collect the dividends and hold that stock and get a monthly paying dividend again. So one thing I always like to go and do over here, so I'm going to go over here to RYLD dividend per share, and you guys can all do this by yourself. Again, I always go to the NASDAQ one. It's the easiest one by far to do. Then you're just going to scroll down here and you can see it all. So without going to this right here and looking at everything, we want to go back to Seeking Alpha. You guys know I love this website. I use the free version. You don't need to pay for it. So I always go to the max and kind of give it a whole look. The difference is with this one though, and the problem with this one is this one has not been around super long. So you guys know I love the analyzer tool of going and looking at it and comparing it to other stocks. Is that going to guarantee its future? Absolutely not. But it kind of shows when times are bad, when times are good, how the stock reacts, how it moves, and things like that. And that's kind of something I always want to see. So RYLD paying at about $25.33 currently. I'm sure that's moving as we speak, but that's kind of just right now how we're at. We're close to the all times here, but again, you can see the 52-week low, 52-week high here. The PE ratio is not available, but why we like this one. And this is not something I am invested into personally. If I was going to do covered calls, I would rather do it myself. There's another one called QYLD that I did a little while ago. Again, that video is in my channel as well. Definitely go look that up and do some more research on this. So I always like this one. So this is going to basically hold everything that the Russell is covering here. And that's something that, so your healthcare, industrials, financials, you're going to see the top 10s, of course, are the Vanguard Russell 2000 ETF is the main thing that's holding. And then it breaks down everything here for you, gives you your percentage just like it does here, just kind of in a circle chart here. Something I like to look at, and you guys know we always do this. It's the same settings as normal. We're starting with $10,000, and something we can do that I haven't done. Let's start with $1,000 because most people have $1,000 to put into something, and then we're going to contribute the $500 every month. Now, for the average person in America, we're going to fix this, and we're going to start doing this a little bit differently here, and we're going to make it $250 a month. But I think we're going to make it $400 because I think everybody can do $100 a week, so that's basically $100 a month. Waiting on it here right now. So here we go. It's pushing, and here we go. So you have everything here. So your final balance over the years, so over the years anyway, of 2020 is you guys did actually pretty well. You guys are going to see that RYLD did compete with SPY and PTY. Now, the only thing and why I don't like showing this portfolio visualizer tool here on this video and why I would not trust it here on this one is because RYLD hasn't been in conception long enough to really go through the ups and downs, in my opinion. Now, with that being said, you guys can probably hear my English Bulldog snoring. I'm sorry about that. But there are things here that, of course, the other ones have not been through. So if you're going to look at RYLD, and let's go look at QYLD instantly. They're about the same, but QYLD is doing it on the S&P 500, and right here or this one's on the NASDAQ, my bad, not the S&P 500, and this one's down because this is going to be focused on tech. These are just things, again, but if you're here for the passive income and that's all you care about, you don't really care about the share price a whole lot going up and down, and your main thing is getting that dividend every single month, which is very possible. People do it. I understand it completely. This is something that you maybe want to be interested in. Now, compared to PTY, which is going to pay that 13 cents per share no matter what, pretty much every month. I think they've only missed it like one time in their inception, and they've been around for a while now, is you can see that these change here. And that's something like this past month, 24 cents. That's pretty good. But if you go back a couple months ago, about a year ago, you're at 15 cents and 17 cents. So you don't exactly know what your income is going to be for that month. And that's something that you're going to have to kind of figure out and worry about. And you're waiting for that ex-dividend date where they tell you, hey, we're going to pay you this much per share. I would rather be in PTY. I know it's going to fluctuate a little bit price-wise. Again, it's kind of at like all-time highs right now. But I know what I'm getting every single month. I know what I'm paying for. I know what it's in. I like the people over at PIMCO. Not saying that I don't like the people over here that are running the RYLD and QYLDs of the world. I'm just sticking with PTY until they prove a little bit more. Now, that's not saying here in the up and coming months, if this can get dipped down more to where I kind of want to buy it. If I would have known about this one during the pandemic, I probably would have bought some up, just like QYLD. I did buy some of that during it, and I already sold it for a profit. Yes, I know if I'm doing it for the dividends, why'd I sell it? It just got to the point where I knew it was a great place to sell and I could buy more PTY with that money, so that's what I did that with. So this one, again, make your own decisions, do your own research. It's very important to do your own due diligence. Now this right here, you see this 30.9%. This is your year to date. This isn't your max, guys. Remember, look at your max. No, 2020 crash, it happened, it fell all the way down. And then it slowly, it still has not recovered compared to like a SPY or something that's actually way up here now. Or it's further than this right here. It's actually positive rather than this one has not even made it back up to where it was pre-pandemic levels. So with that being said, guys, I hope you guys enjoyed this video. I hope you got something from it. If you have any questions, please comment below. Let me know. I love helping people out, and I will see you guys in the next dividend video.